Then we find the various bases for the classification of audit. First, we find on the basis of scope. Next is on the basis of nature of activity, on the basis of form of organization. Next is who conduct, or you can say that on the basis of independence, how much the auditor is independent or not. And the next is legal necessity. And the last is method of examination. Let me start from the first category, that on the basis of scope. In this heading, we find two subheadings. The first is on the basis of general scope. Second is on the basis of specific. So, in the general scope basis, we can say that this is as like as periodical audit or annual audit, which will be conducted on annual basis after the completion of financial year. The regular audit is called as general audit. It is required at the end of every financial year. And the second category on the basis of scope is specific scope or specific objective. We can also say that this type of objective is based on the objective of that particular purpose, particular audit. The first is partial audit. In this segment, the auditor do the auditing work on particular books of accounts. So it is called the partial audit, because in this category of audit, there is no requirement to audit all the books of accounts maintained by the business concern. Second is occasional audit. This is the audit that is required on the specific event occurred. For example, to get the loan from a banking or financial institution, the one concern can go for the audit, because the banking institution and financial institution required audited books of accounts. Third is interim audit. This audit is conducted between the two annual audit. For example, the audit for the financial year 2020 and 21 has been conducted, and the audit for the financial year 21 and 22 has been conducted. But if a audit occurred in these two annual audit, then it is called as interim audit. Interim audit is always conducted for a specific purpose. Fourth is cost audit. Cost audit means the audit conducted to find out the actual cost of production and to find the basic elements of cost, that is material, labor and overhead, that how these elements contribute towards the cost per unit or total cost of the production. Next is management audit. Management audit is always conducted for the management operations, that how the management is capable to do their duties for the business concern. Next is performance audit. Performance audit is related to the performance analysis of business, that with the help of various activities in a combined way, how much business is achieving their predetermined objective. Next is standard audit. The standard audit is always conducted to fulfill the specific standard. Suppose a electronic product manufacturing company want to take the standard of ISI mark. So the audit is conducted to find out that up to which level the product fulfill the standard of ISI. If the product fulfill all the standard of ISI, then ISI mark given to the particular product. Next is in depth. Audit in depth means each and every transaction should be verified properly from its origin to the summary. Origin means the first step of the accounting recording, and the summary means to prepare the profit and loss account. Next one is post and vouch accounting. Post and vouch auditing. It is as like as partial audit. In this type of audit, only posting section, that is ledger maintenance, and vouch section, that is bills and their proof, was audited. Next is operational audit, to find out the contribution of various segment, various activities of the business, like purchase department, like sales department, investment department, cash management department, inventory department, that how much they are contributing towards the performance of business concern. This type of auditing is conducted. And in this category, last audit is cash audit. As its name, this audit is only concerning to the cash department. How much cash has been received by the department, how much cash disbursed by the department, and what is the closing balance, that is cash in hand at the end of the year. All these point has been audited by the auditor in cash audit. So in the first category, that is types of audit on the basis of scope, is completed. Now we have to move towards the next category, that is nature of activity. In the nature of activity, we again find two subheadings. First is commercial, next is non-commercial. Regarding the commercial audit, you can say that audit conducted for those business concern whose primary objective is to earn profit, or the business who earn profit as a primary objective. Audit of these units or business is called as commercial audit. And in case of non-commercial audit, non-commercial audit is always conducted for those business, for those organizations whose primary objective is not making profit. For example, charitable trust, NGOs. If a audit is conducted for these type of organizations like NGOs or charitable concerns, is called as non-commercial audit. The next type is on the basis of type of organization or form of organization. We again find two subcategories. First is private audit, second is government audit. Private audit means the audit conducted of those businesses that is owned by the private persons. And the second is government audit. These are the government companies. When audit of these companies conducted, it is called as government audit. In case of private company, we conducted private audit, like if a audit is conducted for the Reliance company, TVS, it is called as private audit. But if a audit is conducted for any type of government company like railway, SRTC, it is called as government audit. In the classification of audit, the next type is who conduct. It is also known as on the basis of independence. There are two further categories in this section: independent audit or internal audit. Independent audit is also known as external audit. External audit means in this type of auditing work, the auditor comes from outside of the business. he didn't have any relation with the business. So it is called as external audit. On the other hand, internal audit. Internal audit means a specific staff within the organization is set for doing the audit work of the same business, because the auditor is from the same organization for which the auditor is doing audit, or for which the auditor is doing audit, and because both are the same origin, means books of accounts of the same business when audited by the staff of the same business is called as internal audit. So on the basis of independence, we can say that in independent or external audit, the auditor enjoy the freedom of auditing work. But in case of the internal audit, because the auditor is employee of the same business, so he have a curve around him in doing auditing work. In the next type of audit, that is legal necessity, means whether audit is compulsory or not. We find further two segments. First is statutory audit. It is also known as compulsory audit. And the second is non-statutory audit. It is also known as voluntary audit. Compulsory audit or statutory audit means for these type of business concern, the audit work is required compulsory. Legally, they have to conduct the audit, whether any transaction is occurred or not. Even no transaction is there, but as per the legal requirement, these businesses have to conduct the audit. What are these businesses? First is any company, cooperative societies, a trust, banking companies, insurance companies, electricity companies, statutory corporation. The one specialty is common in these organizations, that they are governed by the specific guidelines, rules and regulations. For Companies Act 2013, Cooperative Society Act, Charitable Trust Act, Banking Regulation or RBI manuals, Insurance Company manuals, Electricity Company manuals, and for other statutory corporation, other statutory guidelines are there. So it is called statutory, it is called compulsory audit. Other hand, non-statutory audit, this is also known as voluntary audit, means sole trader, any type of firm, individuals and other form of business, they are on their own decision whether they go for auditing work or not. So it is called as non-statutory or voluntary audit. And the last segment is method of examination on the basis of completed continuous balance sheet. Completed audit means in this type of auditing work, all the vouchers, all the registers, all the statements, even we can say the whole financial statements and other statements, registers and vouchers should be verified from its origin to end. It is also as like as audit in depth, but this is on the basis of specific event or objective. This is on the basis of method of examination. If some books of accounts are audited, then the audit is also called as partial audit. Okay. Now, continuous audit. Continuous audit means the audit work is going on with the full year. auditor or his staff in a continuous way or after a gap comes to the client office and do the auditing work on regular basis. It may be on the basis of day to day, it may be on the basis of monthly, it may be on the basis of weekly, or as per the requirement of business, that is based on the nature and size of the transaction. And the last is balance sheet audit. Balance sheet audit is as like as partial audit. In this type of audit, only the balance sheet and their content, means heads of liabilities and heads of assets, are audited by the auditor. So, on the basis of this chart, we find that there are various types of audit, and the category is based on the various specialties. The first is on the basis of scope, nature of activity, type of business, on the basis of independence or who conduct, statutory or non-statutory audit, and method of examination. Let's discuss the next topic, that is difference between accounting and auditing. To maintain the difference between accounting and auditing, we have to find out the basis of difference. These are the basis of difference. First is nature, then scope, qualification, objectives, starting or commencement. Next is reporting, basis of remuneration, appointment, level of knowledge, and duration. Now, first, nature. Nature means the nature of accounting work. Accounting work by the nature is constructive. Constructive means it is related to the preparation of financial statement. It is related to the maintenance of books of accounts. While auditing is analytical in nature. In auditing, the auditor verify the financial statement or profit and loss account and balance sheet prepared by the accounting. So, accountancy or accounting is of the nature construction, and auditing is of the nature analysis or verification. Yes, the second is scope. Scope means area of coverage. In accounting is limited or curved up to the preparation of financial statement and their interpretation. But in case of auditing, it is depends on the agreement between the client and auditor, that what limit is set, that up to what height auditor have the authority to involve with the accounting books. Next, qualification. For doing accounting, there is no formal qualification described anywhere. A client can appoint a graduate, a postgraduate, a chartered accountant, an MCOM based candidate, an MBA based candidate for the working of accounting. But for the auditing work, only a qualified chartered accountant is eligible to do the auditing work. Next is objective. In case of accounting, the main objective is recording the business transaction and preparation of financial statement to provide the position of the business. While under the auditing have the objective of to ascertain the true and fair view of financial statement, that up to which limit the profit and loss account and balance sheet showing the actual position of the business. Commencement or starting. The accounting starts where bookkeeping ends, while auditing starts where accounting ends. So, auditing is always the step that occur only after the ending of account. In in other words, we can also say that auditing is a post-mortem technique. Reporting. In case of accounting, the accountant who are liable to prepare the financial statement or books of accounts, he submit a report of accounts and statements prepared by him in form of financial statement, that is profit and loss account and balance sheet. Actually, there is no other report. Only the preparation of financial statement is sufficient. But in case of auditing, after the doing audit work, a auditor is liable to present a report that is called audit report, and it will be in written form. The reporting shows that what has been observed by the auditor after the doing audit assignment. Basis of remuneration. In accounting field, accountant is paid on the monthly salary basis. Actually, accountant is the employee of the particular business concern for which he is doing accounting work. Auditor is an outsider person always, except internal auditor. Auditor gets fixed amount as per agreement with his client, that is called remuneration. Auditor is not an employee of the business concern, so he is outside. Appointment. Accountant is always an employee of the business concern and appointed by the owner of the business or authorized person of the business. In case of auditor, as auditor is an independent professional person and appointed by the owner of the business or authorized person of the business, but only on the annual basis. In case of accountant, it is employee. One time it is appointed, then he will go with the work till his resignation or separation. But auditor is on contractual basis, that is for 1 year. Same auditor may be there, but for next year there should be again an appointment of that particular auditor. Next is level of knowledge. For accounting work, accountant required to have knowledge of accounting only. There is no requirement for the audit techniques and procedures. But in case of auditing, auditor have the knowledge of accounting as well as the auditing. Even for auditing work, he also have a knowledge of prevailing laws, accounting standards, statement on auditing, and various provisions of company laws. Last is duration. Accounting work is continued regularly throughout the year. Day to day, accountant do the work for their concern. But in case of auditing, as auditor is appointed for the audit work, that is based on the accounting work done by the accountant. So the work done by the accountant for full year after the completion of that financial year get audited by the auditor. So accountant done the work for whole year, but auditor do the auditing work after the completion of the year. The next topic is difference between auditing and investigation. Actually, both are the same terms, but in commerce, there is a difference between auditing and investigation. Actually, when we go with the minute thinking or reading, then we find that they are totally separate from each other. Let me discuss the difference. First is meaning. Auditing means systematic examination and verification of financial statement of a business concern with the help of internal controls, internal audit, internal check, etc. techniques. On the other hand, investigation. It means a systematic inquiry or examination conducted to uncover potential financial irregularities, misconduct, fraud, or other suspicious activities within an organization or financial institution. In auditing, it is not expected from an auditor that he have to come with a suspicious mind that something is there. But in case of investigation, the investigator always comes with a set mind that he have to find some potential financial irregularities because they are actually there. Purpose. The aim of auditing is ensuring compliance, assessing financial accuracy, and evaluating internal controls. Compliance means compliance of accounting standards, accounting policies, management guidelines, and provisions of prevailing law in the industry. On the other hand, the aim of investigation is uncovering fraud, misconduct, irregularities, and gathering evidence. Means, in case of investigation, investigator have to find out fraud, misconduct, irregularities, and gathering evidence because investigation is always done for these type of specific purposes. Scope. What is covered under the auditing? If we talk about auditing, the scope of auditing is broad, covering financial statements, internal controls, internal audit, compliance with the regulations, and provisions of the related laws. In case of investigation, investigation is a narrow term because it focuses on only the specific requirement or allegations or suspicions. In investigation, investigator always have a set mind that he have to go with the 1, 2, 3 ABC of the requirements for which investigation is organized. Next, methodology. Auditing includes systematic examination of financial statements, financial records. It is also include the following of auditing standards. In case of investigation, investigation includes in-depth inquiry, forensic analysis, interviews, and surveillances. In investigation, actually investigator have some suspicious or irregularities in the books of accounts that have to be found out by the investigator. So his methodology should include inquiry, forensic analysis, and interviews. Frequency. On what interval they occurred. In case of auditing occurred periodically. Generally, auditing is conducted on annual basis, but as per the requirement, it may be it may be based on another intervals as quarterly, half yearly, etc. In case of investigation, it occurs in response to the specific concern or allegation. Means if someone is unsatisfied with the books of accounts or business concern, then he can apply for the investigation. And investigation is done only on the basis of requirement of the applicant. Reporting. In case of auditing, the issues observed under auditing work are reported in audit report. Issues, audit reports providing assurance on financial statements and internal controls, that how much statements, how much vouchers, registers, profit and loss count, balance sheet are debited from the accounting standards or provisions of the laws, and up to what level internal control are working. In case of investigation, the investigation generates investigative reports containing findings and evidences, that what type of irregularities, what type of frauds, what type of errors find it during investigation, and what type of evidences supported to them. The last difference is outcome. Auditing provides stakeholders with assurance regarding financial integrity and compliances, that preparation of financial statement is up to mark. In case of investigation, investigation addresses concerns of stakeholders affected by the suspected misconduct or fraud. Means how much or up to what level fraud and errors are in the books of accounts. Auditing in deep. Actually, auditing based on some pillars. It is also known as internal control. So, let me discuss that topic of internal control. First, we have to talk about the meaning of internal control. What is internal control? Internal control is an important tool of management. Actually, this is a technique that is used by the management for the performance of business concern. Business concern means various types of activities that is required for a business to achieve its predetermined goals. Internal control means the built-in cross checks in the system, supplemented or helped with proper supervision and internal audit that carried out by the staff appointed by the organization. So here internal control means a built-in cross-check system. Built-in means a permanent part or a integral part. Cross-check means that work of the one person will be automatically checked by the second person in their ordinary course of duty. There is no pressure on the second person to check the work of first person. It is automatic. That is called as cross check. So internal control includes the quality of built-in means as a integral part. Cross checks means automatic checking on the work of the first person by the second person. with proper supervision means some supervisor is there to observe these processes. And internal audit is the another benefit of internal control that is conducted by the employee appointed from the business itself or from the business within. If we talk about these days business has been become more complex in the sense of nature, in the sense of number of transaction, size, and the management. So management find very difficulties to get correct information regarding the various segment of business, various aspect of business. Internal control assures the management that the information supplied to it is reliable and accurate. And on which basis it will occur? It will occur on the basis of internal control. The internal control are exercised to ensure the accuracy and reliability of accounting data and other records, to identify weaker areas of operation and to improve them, to improve operational efficiency of the business, to safeguard its assets, and to ensure orderly conduct of business in an effective manner. So internal control is very effective tool for the management to operate the business in a better and effective way. So this is all about internal control. Now we can say that internal control is a key in the hand of management to run the business in a very effective, in a very accurate, in a very timely manner. It provides various types of benefits towards the business, like identification of weaker areas, improvement on them, increased operational efficiency, better performance of business, safeguard of assets, and timely conduct of activities of the business. According to American Institute of Certified Public Accountants, internal control includes the plan of organization and all the coordinate methods and measures adopted within a business to providing safeguarding of its assets, checking the accuracy and reliability of its accounting information, promotion of operational efficiency, and encouragement to the following of prescribed managerial policies. Again, we can say internal control also motivate the business policies to adherence itself and other laws prevailing in the industries related to the particular business concern. So, what is in summary internal control? Internal control is a key tool in the hands of management to the conduct of business in a timely or orderly manner. If we talk about the types of internal control, types of internal controls are administrative and accounting. The one is administrative control, the second is accounting control. Accounting control further involve two categories. First is internal check, second is internal audit. So let me discuss first administrative control under the head of internal control. What is administrative control? It includes plan of organization, record keeping. Record keeping means maintenance of books of accounts. Distribution of work and authority means which type of work should be performed by this type of employee and how much level of authority have to be delegated to him for the proper conduction of activities of working of that particular employee. Process of decision making means what type of decision will be taken on the basis of data gathered from the bookkeeping or plan of organization. Time and motion studies means control on the human resources. Quality control, which type of product will be provided by the, which type of services will be provided by the business concern. Statistical analysis means comparison between the data of current year, of previous year, and so on. And last is performance evaluation, that up to what level the business is going to achieve its predetermined goals or aims. So, administrative control include all type of control. Even accounting control is a part of administrative control. We can say Administrative control is a wide range which includes accounting control under it. Now, accounting control. Accounting control having two segments, internal check and internal audit. Let me discuss internal check. What is internal check? Internal check is a system forced in business under which the recording of business transaction is arranged in such a manner that the work of one staff member will automatically be checked by other staff in normal course of recording of transaction itself. So, internal check assures that during the bookkeeping, during the preparation of books of accounts, the work of first person will automatically checked by the second person in ordinary course of his duty or second person's duty. There is no pressure, there is no extra monetary burden on the business concern for internal check. This is simply distribution of duties. Give their views on internal check. According to them, a system of internal check as an arrangement of staff duties where no one person is allowed to carry through and record every aspect of a transaction such that without collusion between two or more persons, fraud is prevented. At the same time, possibilities of errors are reduced to a minimum. So, internal check is an automated system in which the work done by the first person will automatically checked by the second person in his normal course of duty. Now, internal audit. Internal audit is explained as the verification of operations within the organization by the specially assigned staff, and staff is appointed from the business itself. It is an important tool of management to evaluate the correctness of records on a continuous basis in an organization at the time of starting of the working. So, internal audit is a part of accounting control. Internal audit is always conducted by the employees specifically appointed by the business itself. The books of accounts, the records, and the person who is specifically appointed for the verification and analysis of the books of accounts is same from the same business. So it is the specialty of auditor if he is from the same organization as an employee to do the auditing work, then he is called as internal auditor, and the work performed by that particular internal auditor is called as internal audit. Howard F. Settler gives their views that internal auditing is an independent appraisal activity within an organization for the review of operations as a service to management to provide the accurate and reliable data. And auditor. In general sense, we can discuss that if internal control is existing in the operations of a business concern, then what is the requirement of audit? What is the requirement of internal, even external audit? Let's discuss. The position of the internal auditor regarding internal control has been stated in the statement on auditing practices that is issued by the ICAI, Institute of Chartered Accountants of India. What this is? The duty of safeguarding the assets of a company is primarily that of management, and the auditor is entitled to rely upon the safeguard and internal controls instituted by the management. Although he will take into account the deficiencies he may note therein while drafting his audit program. It clearly means that an auditor is related only with the evaluation of internal control for what? To know its strength and weaknesses. In case he finds that the internal control system is inadequate, he should then plan to carry out detailed examination of those areas where the system is weak. It is therefore necessary for the auditor to acquaint himself fully with the internal control in force and their actual operation. It will help him the formulation of his audit program. He may also bring the shortcoming of internal control system to the notice of the management. So, in summary, we can say that internal control is existing in a business concern, and an auditor is come to do the audit assignment in the same business. Then he have to analyze the level of internal control. He have to analyze the risk assessment degree. If he finds that internal control is weak on some areas, then for that particular weak areas, he have to go with the detailed check each and every transaction of that particular area. And for rest person, where he find that the internal control is strong, he may go with the test check. But the whole liability of auditing work is only on the shoulders of auditor. He cannot deny his liability that he rely upon the reports generated by the internal control system. No, he cannot do so. He have to analyze the internal control system for its weakness and strong portion. For a strong portion, he may feel some relaxation that he have to go with the testing. So, in weaker areas, he have to go with the detailed checking and suggest to the management for the improvement. And after the evaluation or analysis of internal control system, auditor have to modify his audit program to do the audit assignment work in a better performance manner, in a timely manner, in an effective manner. So, this is the relation of internal control and auditor. Auditor may take the report of internal control and may deny the report of internal control as the case is arises. Now we discuss some differences between internal check and internal control. Actually, both are the part of accounting control, but there is difference between internal check and internal control. The point of difference is meaning, relation, essence, how are they implemented in nature. So, as a part of internal control, if we talk about the internal check, as we discussed in the previous slides, that is a division of work between the employees. That work of first person will automatically check by the second person. In internal control, it is a tool in the hand of management for orderly, effectively, and timely conduct of business, that also provide the safeguarding to assets and accuracy and reliability of data. Relation. Internal check is a part of internal control under the head of accounting control. Internal control includes two parts. First is internal check and internal audit under the head of accounting control. So, the area of internal control is wide. Then internal check. Essence or conclusion. Internal check is related to the bookkeeping or clerical work because it is the arrangement of duty of the staff. But in case of internal control includes essence of internal check and internal audit. Fourth point, how are they implemented? Actually, internal check is an automatic check. There is no specific implementation of internal check is there. This is inbuilt system, integral part, permanent part of the division of duty. That work of one person will automatically check by the second person in normal course of performance of their duties. But in case of internal control, it includes implementation of various techniques like administrative control, accounting control, or under the head of accounting control, internal check and internal audit. Fifth, nature. Internal check relate to the stage of recording of transaction by the employees. Internal control, it is a tool of management by which the management get accurate and reliable data. Actually, internal control used after the recording of transactions. Next is difference between internal audit and statutory audit. At the time of classification of audit or types of audit, we discussed these 2 points: internal audit and statutory audit. Let me discuss it in detail. First is meaning. Internal audit is the arrangement within the organization to verify on continuous basis the correctness and truthfulness of transactions done by the staff by a specific appointed staff from the business itself. That is called internal auditor, and the work done by internal auditor is called as internal audit. Whereas statutory audit is the examination of books of accounts of business by an external auditor. External auditor will not be an employee of business. This type of audit is called external audit, and the auditor is called as external auditor. Nature. Internal audit is not compulsory. It is voluntary. It is depend on the size of business. Generally, big business houses used this technique for the correctness and truthfulness of their transactions or accounting information. Statutory audit. In case of some businesses, it is compulsory. Statutory audit is compulsory in case of business houses incorporated under the Companies Act and other act like company, trust, cooperative societies, insurance companies, electricity companies, banking companies, and other type of statutory corporations. So, these class of business cannot deny to get their books of accounts audited. They have to go there. Legally, they have to conduct an audit for books of accounts. Auditor. Internal audit is carried out by the staff appointed by the business enterprises. The staff is within the business to check the books of accounts, to analyze the truthfulness and correctness of books of accounts of the same business. There is no prescribed qualification for internal audit or internal auditor. Any staff, new or old, can be appointed as internal audit to do the work. In statutory audit, only the qualified chartered accountant, will conduct the statutory audit. In case of responsibility, there is again we find the difference. Being an employee of the organization, internal auditor is answerable to the management. His duties, his authorities always curbed by the appointing authority of the management. But in case of statutory audit, the auditor is from the outside or external auditor. He is responsible and liable towards only the governing provisions of law and accounting standards related to the business concern. The external auditor is independent of the management. He is not responsible in any manner to the management. Last difference between the internal audit and statutory audit is objective. The internal auditor point out irregularities in the procedural aspect and suggest ways and means to rectify the same. At the recording time of transactions, internal auditor point out the irregularities or errors, and at the initial stage they can rectify. So the objective of internal auditor to find out the errors and frauds at the initial stage of recording the business transaction. But in case of statutory audit, this is concerned with the legality and validity of the transactions of business. Statutory auditor's work is based on the financial statement prepared by the business. After the completion of financial year, when the books of accounts presented to the auditor for the audit work, then he done the audit, and his main objective to find out the true and fair of the business concern on the basis of observation or audit assignment done by the auditor. So there are massive difference between the internal audit and statutory audit in the sense of meaning, nature, auditor, responsibilities, objectives. Conceptual framework of auditing, that is concept of true and fair view. Actually, true and fair view in auditing means that the financial statements are free from material misstatement and faithfully represent the financial performance of the business entity. Free from material misstatement, any type of important information should be disclosed at the proper position in the financial. Although the expression or statement of true and fair view is not strictly defined in the accounting literature, we may conclude or derive the following general conclusion as to its meaning. True. It suggests that the financial statements are factually correct, and have been prepared according to the applicable reporting framework, such as the IFRS, and they do not contain any material misstatement that may mislead the users. Misstatements may result from material errors or omissions of transactions and balances in the financial statements. Material misstatement means the important information that can mislead or change the mind of investor. If there is any information contained in the books of financial statement that change the mind of investors, then it is called as the material misstatement or material information. If it mislead, then it is called misstatement, and if this lead to the investor to change their mind, then it is called the material information. So, in the sense of true, the material information should be disclosed properly and the data factually correct. In the sense of fair, it includes that the financial statement present the information faithfully without any element of biasness and partialness, and they reflect the economic substance of transactions rather than just their legal form. Means all the information should be fully disclosed without any partialment or without any biasness, so that the books of accounts provide a fair and proper information regarding the importance or substance of transactions. So this is all about the concept of true and fair view. Again, we can conclude it as true means factual, correct information. Fair means presentation of information should be faithfully, without any biasness, without any partiality. Let me discuss the next concept, that is concept of auditor's independence. This concept provides that the impartiality and objectivity of an auditor to performing the audit assignment, free from conflicts of interest and biasness. It aims to increase public confidence in financial reporting by ensuring that the audit has been done transparently. So, concept is all about the independence of auditor. What is auditor's independence? Let me discuss. Auditors are expected to provide an impartial and professional opinion on the work what they have done in their audit assignment. An auditor who lacks independence virtually renders their accompanying auditor report useless to those who rely on them. It is absolutely correct. If auditor is related to any type with the business in which he is doing audit assignment, then it may be possible that he may virtually render their accompanying auditor report useless to those who have a faith on them. For example, consider yourself a potential investor in ABC company. If you know that the auditor of ABC company keep a close personal relation with the CEO of the company ABC, how much would you trust that the audit work is a fair representation of the company's financial standing or position? How can you be certain that the auditor and CEO did not collude to issue a favorable audit report that should always attract the audit investors? The fact is that auditor who lack independence compromise the integrity of financial market and the reliability of information. Investors would not be willing to extend capital to companies knowing that the audited information was performed by an auditor who is not independent. Furthermore, banks would not be willing to issue a loan for fear that the auditor might be provided a biased audit report. So, always auditors should be very independent in his work. He, if he have any type of interest, whether it is in relation directly or indirectly, investor have a point that the report may be misguided to them, and they have again a point too that he will not rely on the auditor. Then what are the elements that affect the independence of auditor? Yes, these are the 5 threats or elements which affect the independence of a auditor. First is self-interest threat. A self-interest threat exists if the auditor holds a direct or indirect financial interest in the company or depends on the client for a major fee that is outstanding. Next one is self-review threat. A self-review threat exists if the auditor is auditing his own work or own that is done by others in the same firm. Next is advocacy threat. An advocacy threat exists if the auditor is involved in promoting the client to the point where their objectivity is potentially compromised. Next one is familiarity threat. A familiarity threat exists if the auditor is too personal or close to the family with employees, officers, or directors of the client company. And the last one is intimation threat. An intimation threat exists if the auditor is intimated by management or its directors to the point that they are deterred from acting objectivity. So, these are the elements that affect the independence of an auditor during his audit assignment. So, auditor is always very much independent while he is doing his audit assignment. Otherwise, his independence will be affected. Auditor's independence include the following elements: ethical standards, independence in fact, independence in appearance, audit for policies, regulatory oversight, professional judgment. Now we have concluded chapter 1, and chapter 1 is Introduction to Auditing. Let's summarize what we have discussed or maintain the understanding. First is meaning and definition. Then we discuss about the objective, features, origin and evolution. Next is basic principles, techniques, scope. Then we discuss about the advantages and limitations of auditing. In the next segment, we discuss various types of auditing. Then we discuss about the difference between the key term, accountancy, auditing, and investigation. And as a part of internal control, first we discuss about the internal control, then internal check, then internal audit, and after that we differentiate between the internal check and internal audit. We also discussed about the internal control and the auditor's relation. And finally, we reach at the concept of true and genuine and concept of auditors. Okay, class.